They told you it was a routine diplomatic meeting. They told you the G7 finance ministers were gathering to discuss economic stability. They lied. When the Treasury Secretary calls an emergency meeting about supply chains on a Tuesday morning, it is not about stability. It is about panic. It is code for a terrifying reality that Washington is trying desperately to hide. We have run out. The United States government has zero strategic silver reserves. Let me repeat that because it is the most important sentence you will hear this year. Zero. We sold the last bar of our strategic stockpile in 2002 to mint coins for collectors. And now, in 2026, as the drums of kinetic war beat louder in Eastern Europe and the Pacific, the Western war machine has realized it has no metal to build its shields. While you were watching the charts, while you were worrying about the 15% margin hike at the CME, the real game was being played behind closed doors. This was not a market correction. This was a clearance sale arranged for sovereign buyers. The rule change at the exchange was designed to do one thing: smash the paper price so the government could secure physical metal before the public realized the vault was empty. In the next 20 minutes, I'm going to walk you through the geopolitical chessboard. I am going to show you why silver has been quietly reclassified from a precious metal to a weapon of war. I will explain why the Defense Production Act is the gun on the table that nobody is talking about. And I will prove to you that the rationing you are seeing at Costco and the Mint is not a logistics failure. It is a soft nationalization. Welcome to the endgame, the smokescreen and the margin trap. Let's start with the weapon they fired at you yesterday. Notice number 26, SO19. A boring PDF document released by the CME Group. To the average trader, it looked like standard risk management. They raised the margin requirements on silver futures by 15%. They demanded more cash from anyone holding a position. On the surface, this is just house rules. But you have to look at the timing. They didn't raise margins when the price was dormant. They raised margins the exact moment silver breached $86. They waited until the short sellers were staring into the abyss of insolvency. And then they changed the rules to save them. The immediate reaction was exactly what they programmed. The algorithms read the headline. The leverage specs were forced to liquidate. And the price dropped $2.50 in a matter of minutes. The media called it a crash. They called it the bursting of the bubble. But look closer at the tape. In 2011, when they hiked margins 5 times in a week, the price collapsed and stayed down. It fell from $50 to $35 in days. That was a liquidation event. Yesterday was different. Yesterday, the price dropped to $83.57. And then it hit a wall of concrete. It bounced immediately. Why? Because the entities buying at $83 are not speculators on margin. You cannot margin call a buyer who pays in full. You cannot shake out a buyer who is taking delivery. The buyers stepping in at that dip were sovereign wealth funds. They were industrial conglomerates. They were the smart money, realizing that the paper price had just been discounted by a desperate exchange. The margin hike was a smokescreen. It was designed to scare you out of your position. It was designed to paint a red candle on the chart to break the psychological momentum, but it failed. The monster didn't die, it just blinked. The physical market was screaming for help. Which brings us to the real story. The story that explains why the Treasury Secretary is suddenly involved in the silver market. The geopolitical void. Why does the government care if silver is $80 or $800? For decades, they didn't. They treated silver as a barbarous relic. They treated it as a volatile commodity for jewelry and silverware. But the world has changed. We are no longer in a peacetime economy. We are in a pre-kinetic environment. And in modern warfare, silver is not money. Silver is the blood of the electronic nervous system. Every Tomahawk missile requires silver. Every F-35 fighter jet requires kilos of silver for its guidance systems. Every satellite that directs our drones requires silver-coated connections. You cannot build a smart weapon with copper. You need the highest conductivity in the known universe. You need silver. And here is the nightmare scenario that kept the G7 finance ministers awake last night. The West doesn't have it. The United States relies on just-in-time delivery for its defense industry. We import 50% of our needs. Who controls the stockpiles? The BRICS nations? China is the largest refiner. Russia is a massive producer. Mexico and Peru are drifting further away from the American orbit. So when Secretary Bessent convened that G7 meeting about securing supply chains, he wasn't talking about getting cheaper toasters for Walmart. They looked at the inventory reports. They saw the same data we see. They saw the draining of the COMEX, and they realized they are naked in a blizzard. The term they used in the press release was critical minerals. Pay attention to that language. Language is the first weapon of the bureaucrat. For years, the USGS refused to list silver as a critical mineral. They said it was abundant. They said the market was liquid. But suddenly, the tone has shifted. By rebranding silver as critical, they are not just changing a definition. They are building a legal framework. They are preparing the battlefield for intervention. If silver is just a precious metal, then you have a right to buy it. But if silver is a critical strategic asset necessary for national security, then your right to own it comes second to the military's need to use it. This is the pivot. This is the moment the mask falls off. The G7 meeting was the signal that the free market era for silver is ending, and the era of resource nationalism is beginning. The mechanism of soft nationalization. So how do they take it? How do they secure the metal without sending soldiers to your door? They don't need to confiscate it from your house. I just need to stop it from ever getting there. This is what I call soft nationalization. And they have a legal weapon ready to fire. It is called the Defense Production Act. Title I of this act gives the President broad authority to control the industrial base. It allows the government to require businesses to sign contracts or fulfill orders deemed necessary for national defense. Crucially, it allows them to prioritize these government orders over all other commercial contracts. Think about what that means for the silver market. Imagine you are a major refinery. You produce 1,000-ounce bars. Usually, you sell some to Samsung, some to Apple, and some to the U.S. Mint to make eagles for the public. But tomorrow, you get a letter invoking Title I. The Department of Defense needs silver for a new aerospace program. They don't ask nicely. They order you to fill their allocation first. If there is anything left over, you can sell it to the public. But in a shortage, there is nothing left over. This is why we are seeing this strange behavior at the retail level. Look at Costco. For 2 years, they were the people's bullion dealer. They sold silver and gold freely. It was a beautiful example of capitalism. But suddenly, this week, we see limits. 1 transaction per membership. Hard caps on quantity. Why would a retailer limit sales of their hottest product? In a free market, if demand is high, you raise the price or you buy more inventory. You do not tell your customers to go away, unless you can't replace what you are selling. Costco knows the pipeline is drying up. They are rationing because they have to. And look at the U.S. Mint. They just announced a delay on the 2026 Eagles. Backdoored immediately. The government's own mint cannot source enough planchettes to meet demand. Or perhaps they are being told to stand down. Perhaps the silver that was destined for those coins is being diverted. Maybe it is going to Raytheon. Maybe it is going to the strategic reserve that they are frantically trying to rebuild. This is how the freeze happens. It doesn't happen with a press conference announcing confiscation. It happens with a sold-out sign on the website. It happens with a 3-month shipping delay. It happens with a premium that goes so high it makes buying irrational. They are closing the exit doors. The G7 is coordinating this. They are trying to form a buyer's cartel to secure mining contracts in friendly jurisdictions. But they are late. The Chinese have been signing these contracts for a decade. The West is trying to build a fence around a herd that has already escaped. Technical confirmation of the collapse. You might think this is conspiracy theory. You might think I am reading too much into a bureaucratic meeting. But the numbers do not lie. The math of the market is screaming the same warning. We just have to know where to listen. Look at the vault data released alongside the margin hike, while the price was being smashed on the screen. The physical metal was leaving the building at record speed. 2.2 million ounces flowed out of the COMEX depositories in a single day. Asahi, Brink, CNT. They all bled silver. It's a registered category. The silver available for delivery dropped by nearly 400,000 ounces. This confirms our thesis. The margin hike was a sale for the whales. They smashed the price to $83 to trigger stop losses. And then they backed up the armored trucks and loaded them with cheap metal. But the most damning evidence is something called backwardation. This is a technical term, but you need to understand it. Normally, a futures contract for delivery next month is more expensive than delivery today. You have to pay for storage. You have to pay for insurance. That is a healthy market. But right now, we are seeing the opposite. Traders are paying a premium to get the metal now. They are rolling their positions backward. They are fighting to get into the January delivery window. Why? Because they do not trust the exchange. They do not believe the silver will be there in March. This is the market screaming that there is a shortage. This is the sound of a bank run. And then there is the Shanghai Shield. While New York trades at $83, the Shanghai Gold Exchange is trading at $93, a $10 arbitrage gap. In a connected world, this should not exist. Ships should be moving metal from west to east to close that gap, and they are. That is the sucking sound you hear. That is the vacuum cleaning out the London and New York vaults. The West is trying to suppress the price to save the dollar. The East is bidding the price up to secure the commodity. It is a tug of war. And the East is winning because they have the physical demand. The G7 knows this. That is why they met. They cannot stop the arbitrage with interest rates. They cannot stop it with margin hikes. The only way to stop the bleeding is to seize the flow, to implement export controls, to nationalize the mines, to change the rules of ownership, the verdict, and the survival plan. So where does this leave us? It leaves us in the most dangerous moment of financial history in our lifetimes. The system is blinking red. The CME is changing rules to protect the banks. The Treasury is holding emergency meetings to protect the military. And the retailers are rationing to protect their inventory. Everyone is protecting themselves, except you. The retail investor is the last to know and the first to be sacrificed. They want you to look at that chart and feel fear. They want you to see the volatility and sell your position. They want you to hold paper dollars while they accumulate strategic resources. Do not fall for it. The drop to $83 was a gift. It may be the last gift you ever get. The window to acquire physical silver is closing. Not because the price will go too high, but because it may simply become unavailable to you. When the Defense Production Act is fully activated, when silver is officially designated as a strategic military asset, you will not be able to walk into a coin shop and buy a tube of eagles. That metal will be spoken for. It will belong to the state. So you have a choice to make today. You can trust the paper price. You can trust the media that tells you the rally is over. Or you can trust the actions of the desperate men in Washington. Watch what they do, not what they say. They are scrambling for metal. They are changing laws. They are breaking the free market to secure their survival. You should do the same. Get out of the paper. Get out of the ETFs that claim to hold metal but only hold IOUs. If you cannot touch it, you do not own it. And in a world of soft nationalization, if you do not own it, you never will. The G7 has shown its hand. They are panicked. They are cornered. And a cornered animal is dangerous. But it is also vulnerable. The Shanghai shield has held. The floor is solid. The next move is up. And it will be violent. Prepare yourself. Secure your position. And do not let them shake you out. Because the only thing worse than being early is being right and then selling your insurance policy to the arsonist who is about to burn the house down. They are changing the rules to keep you out. But there is one loophole they haven't closed yet. One way to store wealth that is outside their immediate grasp. In our next report, we are going to discuss the private vault strategy. We will talk about jurisdictions that are beyond the reach of the G7's new protocols. Subscribe so you don't miss the escape hatch. Stay skeptical, stay prepared, and keep stacking.